ask you about the Fisker deal. I mean, it is interesting that Foxconn, I mean, people think about Foxconn as the iPhone manufacturer, but here it is manufacturing an EV. How much confidence do you have in its ability to make that car, which will live up to what Fisker hopes to be its brand?
Well, yeah, well, Fisker's been talking about the Foxconn model for quite a while. So Fisker is a unique EV company where instead of producing everything in-house, they're going to outsource everything to contract manufacturers. And of course, the key question is, could Foxconn produce this? It's unlike Magna, who's actually a contract manufacturer for the autos. So there is some risk, but nevertheless, it is something positive for the industry.
How do you view it? I mean, you know, if given the choice, and I understand that we're all working from home, Jamie, and I hear your dog, so you're probably dealing with that too. So thanks for enduring that. But in terms of deciding on, you know, this sort of like a Magna model versus a Foxconn model, does that add more risk to the Fisker story?
Well, yes. First of all, the Ocean, Fisker Ocean is going to be built by Magna starting in 2022, latter half. So that we know is going to be produced. Now, the other models, yes, there is a risk that Foxconn is not a contract manufacturer like Magna. So there is a risk. But the risk also goes throughout the whole industry. Remember, a lot of these EVs are startups. Unlike Tesla that's been around manufactured for years, a lot of these EVs still don't have a prototype on the road, still have a production forecast in the last half of 2022, sometimes into 23. So there's a lot of risk. And the biggest risk is not only production, but supply of equipment like cells that Tesla mentioned, and also batteries. Battery constraint could be something that limits the whole industry. So there's risk across the board, not just for Fisker. But I think with Fisker using a outsourced model, de-risk the production, which for Fisker. Fisker concentrate on actually designing what they call passion and designing a car that consumers want and basically have somebody else build it for them.
Is it hard to sort of, I don't want to say come up with a model because your model is your model, but how the stock trades is how the stock trades. And the two seem to be very different stories these days with the entrance of the retail investor and high interest amongst the retail investor. So I'm curious, Jimmy, what you think of the valuations in your space are and whether or not these stocks are actually buys right now, despite the runs.
Yeah, I think they are biased because if you look at most of the price targets, including our price target, it's based on 2023-24 production. So a lot of investors are looking at this as, okay, I like this stock. It's maybe overvalued, but normally growth stocks are overvalued. You can make that argument. But on the other hand, you could say investors are looking for ESG investment, and they're looking to pile into ESG names, and EVs are ESG names. So I think valuations are a little bit ahead of themselves, but they'll eventually catch up when some of these companies are actually producing revenues and cash flow.
Shepard Smith here. Thanks for watching CNBC on YouTube.